Hi, this is Ken with MinnoTank, and I am here with Ryan Kole from VCapital. Today, our segment is called How to Pitch Us, and it's where we learn the best way to pitch VCapital specifically. So, Ryan, can you tell us a little bit more about your firm and the best way to pitch you?
Definitely. Ken, well, thanks for having me. I really appreciate the time and look forward to communicating with your audience. So VCapital, we're a unique venture capital firm founded by Len Batterson and Jim Vaughn. I'll get into the history later. But VCapital is Series A focused, sector agnostic, with a preference for Midwest-based companies. We have a different model than a traditional VC firm in that we have a group of accredited investors who pick and choose between the deals that we offer. And we create a special purpose vehicle for each deal. So it'd be a VCapital Ken Startup Company LLC, and then that's its own entity. And then our investors decide whether or not they want to invest, and if so, how much to invest in that special purpose vehicle. But as far as pitching us, so we like a hard tech, hard science component to it. We want something complex that the average investor will probably pass over. Due to our unique network and our board of advisors, we're able to do many different things and get experts to validate the technology or the company before we decide to move forward. So we like to do a lot of homework on each deal, as most traditional VCs do as well. But we go anywhere from 3 months to a year plus of due diligence on a company before we decide to go further. As far as pitching us, so we usually start every company, regardless of who it's coming from, starts with an executive summary and a pitch deck. An executive summary should be 2 pages max. 1 page would be ideal. The pitch deck should be around 20 pages or less, and it should clearly describe the company and what they're intending to do. And then after we go through the executive summary and the pitch deck, then if we find it fits our criteria and it interests us, then we go forth and email the founder and ask to set up a phone call. And we'll be in about a 30 minutes to an hour phone call. I go through the pitch deck with them. We're a very lean, small firm here. So I'd be communicating directly with the founder, and we go back and forth questions. And then I bring it back to, we have a Monday morning meeting, internal meeting with the whole VCapital, and I go over the company. If I think it's worth presenting, I present to the company, and then they'll poke holes in the company and pose a bunch of other questions, which I will then go back to the company, startup company, ask those questions. It's a lot of back and forth. I'll get those answers. I'll come back to our meeting the next week, go over those, come back with more questions, and then we start the process. If it's going forward, it gets past those gates, then we start going towards our experts, our Rolodex, our network of people. And if it's a medical deal, we'll go to a doctor in that particular area and see if this makes sense, if this is needed, does it solve a problem, is there a market for it, and we'll leave the medical component up to that doctor. As far as a business case and use case, that's sort of where we handle that part. Is there a market for it? Will it sell? The reimbursement process, we have an expert who we go to for reimbursement issues, for coding and so forth. And then we'll talk to clients, prospective clients. We'll do reference checks on the founders. What else? I mean, it's a long process, but we feel that that's what we owe it to our investors, and we don't want to put our name behind something that odds are is going to fail. For example, I believe it's around 17% of startup companies fail to return the capital plus some interest to their investors. 17%. So basically, 8 out of 10 companies are going to be a loss. Okay, or some of the best case break even for their investors. Fortunately, Len Batterson's 35-year career, he has a 37% win rate. Okay, so 4 out of 10 companies return capital plus interest. That being said, 6 out of 10 still fail, right? So what we have to see is potential for a huge home run. That's what we do. We are home run hitters, or swingers at least. We aim to hit home runs. Throughout Len's career, he has 4 unicorns to his name. But we want to see a company that has the potential to be at least a 10x return, and preferably 15, 20x return to our investors. Those are going to make up for the losers.
Awesome. I love it. And so when we're talking specifically about how to pitch you, and we know that MinnoTank's network is mostly early stage tech companies. So I know that you guys say you focus on Series A, but you also do play in the seed space.
Yeah.
So here I am. I'm a company. I'm an early stage tech company. I have a huge TAM. I have some really nice traction. What's the best way for me to pitch? So you're saying I need to come with an executive summary. come with a pitch deck. How do I arrive? And then is there anything special? So some people, for example, there's some other firms here in the Midwest we'll talk about, we want to see an unfair advantage in blank. We want to see a specifically technical co-founder. We want 5+ years of experience. What is your unique thing that VCapital wants whenever they look for a deal? What's out of those, those 3 out of 4, I'm sorry, your numbers are hitting me, but what the ones that have been consistently successful, what was it in those deals and how did they pitch you that made you say, yes, I want to have a second conversation with these folks?
Sure. And Ken, you brought up a good point. We are Series A focused, but we will invest in seed stage rounds. So MinnoTank companies, we would consider those. Sim Machines, we did a seed stage round. They're a Chicago-based company in artificial intelligence, machine learning. Very excited about their progress. We were looking to invest in them in the next round as well. We like to get early. We like to get our hands dirty. We usually see companies who have raised some money from friends and family or angel investors, and then looking for their first institutional round. And that's sort of the white space we see where we offer as an advantage to our investors where we get involved there. Our check sizes are about $1.5 to $2 million per company, and then we'll invest in subsequent rounds as needed if we see fit. Back to your previous question. So one of the things, the best way to get a hold of us is through our network. I would try to find, so the 5 current portfolio companies, and we just added a 6th one actually last week, another Chicago-based company doing cybersecurity for IoT. But a lot of the unique theme is they know someone in common with us, whether it be from our board of advisors or an investor or a startup company that we've worked with in the past. Or us personally, the management team here, find an angle. It's easier now with LinkedIn and other avenues to try to find someone in common. But come through that person and have someone make a recommendation. Hey, Ryan, I recommend you meet this company. I think the CEO is great. I think the idea is great. Whatever it is, or through any other people in our company, and they'll bring it to me as well. That's the best way, because a lot of the common theme is these companies are coming from inner circle, people we know and trust. Right? So try to figure that out. As far as the company and what we like to see, we need to see a problem, how the company is solving that problem, okay? And a team that's been there and done it before. Now, we don't need a management team that has had success. We just want someone who's tried it before. Ideally, someone who's ran a VC-backed company in the past. Of course, we've taken on companies that haven't had that history, but the management thing is the biggest piece of that puzzle. That's the key thing. We always prefer the jockey over the horse. We'd rather have a phenomenal jockey and a mediocre horse. Let me say, a good horse. Okay?
Yeah, a good horse.
Then a great horse and a mediocre jockey. Okay? Because the company's going to have to pivot. They're going to have to change direction. They're going to have to figure out a way to overcome hurdles. And if you have a great idea with a subpar management team, they're going to fail, most likely. They're not going to be able to make that rapid change or they might be too stubborn, or they're not going to be willing to take advice or listen, and they're so dead set on their idea that it's going to fail. So we love the managing, and fortunately, VCapital has been around just for about 2 years now. I think actually all of our portfolio companies has a great jockey and a great horse. But again, jockey is more important than a horse. As far as other criteria I like to see, as I mentioned, we're hard tech, hard science component. We want to see something that has huge potential, be a huge disruptor, that's defensible, and has a need in the marketplace that by the time the company is there, the market will be there for. So some of these companies we're looking at right now, there is not a demand for that product. But we think by the time the company evolves and gets to the point where they're ready to hit the market will be there. That inflection point will be there. And that's what we're looking at. So we're always looking to the future and trying to look what's 5 years out. And will this company be ready in that time frame?
Love it. Love it. Okay. Well, that was How to Pitch Me with VCapital and Ryan Kole. Thank you very much, Ryan.
Thank you.